All right, so last night we were talking about that UCAD London model idea that we had. It was very successful. I'm going to walk through it together. So first and foremost, we like to start off on the 15-minute time frame, and we'll bring it back just prior to London. So I have my session indicators on as well. So we have that Sunday's Asian session, which I don't trade, but going into London, we had an opportunity. We had small consolidation, right? Range bound. We also had a new weekly opening gap here. Just to note that off, we had a new weekly opening gap, right? This gap formed with that new weekly candle. So that gap right there. And we have a range, right? A small range, if anything, right? The market is trading sideways. When the market is trading sideways, this is our chance to sit down and speculate, right? And try to take advantage of this because when the market is small, we know in the future there's going to be a large dynamic range or movement that's expected out of this small range. Take this off. You can take this off. There we go. So you can see typically all the gray zones you'll see the market is really small or in some type of consolidation, especially right before the kill zone. Now, this larger one is after London close. This is from 12 p.m. to 8 p.m. Sometimes it'll be very lengthy, but more times than not, if you just look at all the gray areas on my chart that are highlighted, these time periods tend to not produce the greatest setups because the market is range bound. So with that, you already have a roadmap of when to avoid the market and when to trade. There's no reason for someone to try and hunt a trade between midnight going into 2 a.m. It's just pointless because more times than not, you're going to get no volume. So why waste your time? So at that point, we can frame off buy side and sell side liquidity pools within this dead zone. Now, I like to call this dead zone the Asian lunch. You could call it whatever you want to call it. So we have buy side liquidity simply because it's a swing high. That's really why we're labeling this buy side liquidity. We're not taking a random box, right, and saying, "Oh, this is what do you call this? Resistance, right? Or supply and demand." We're not putting up a random box. We know objectively that this is the level. Now, we don't know how far above this high it's going to raid the stops. Whether that's 5 pips, 15 pips, 20 pips, or 30 pips, we don't know. Vice versa, we have sell side liquidity. It's simply a swing low. It's not a box again. It's not a zone, right? A swing low. So that's where our sell side liquidity pool is residing. Now, we could frame other buy side and sell side outside of this zone. We know that, right? We can see this buy side over here, this sell side here, this sell side here, this sell side here, this sell side here. But we're only worried about framing a setup going into the kill zone. And I like to use the dead zones to frame that. After that, we use the opening price of the kill zone because the kill zone's opening price is going to be your natural indication for overbought and oversold. So we could just say 2 a.m., right? This is London's open. Now, I'm not trying to predict necessarily where London is going to take the market. I'm going to let the market do it for me. And it's very methodical in its structure and its pathway in getting to a certain area, right? A certain area of inefficiency, right? A certain area that it wants to fill or correct. So oftentimes, allow the market to do what it wants to do. It's not going to try and trick you. Play it forward. We can see price runs up and takes out what? It takes out the buy side liquidity pool first. It takes out that buy side and it brings price where? Into a premium range because we're above 2 a.m. It's expensive because if this is the opening bid of the kill zone, we can clearly see that it's above it and it's more expensive. So it's overbought. It's in a premium range. So my mind will not be looking to be a buyer necessarily. I'm more likely leaning towards being a seller. Now, I'm not saying there aren't moments and times where price stays in a premium and it keeps buying. We know that there's countless of examples like that too. But from an ideal perspective, I want to be a seller because it's just so expensive. right? I don't get the most bang for buck buying in a premium. I get the most bang for buck buying below 2 a.m. As of right now, we're looking for probably shorts. We can also add other confluences as well, right? So we have 2 a.m. We also have Sunday's opening price. Where's Sunday at? Right around here. We got Sunday's opening price. We're just gonna leave, or we could just leave it as SOP, right? Sunday's opening price. Then we also have midnight's opening price, which is the start of this Asian dead zone here. Pull this over here. That's 12 a.m. So we can see prices above all three of these ideas. Right? It's above SOP, it's above the kill zone's opening price, and it's above IPTA true day opening price. So triple confluence premium, it's very overbought right now. So a sell setup could be unfolding and might be the most ideal scenario. After price runs this buy side liquidity pool, my mind instantly says, what can the market draw for now? If I'm looking for counterparty liquidity pool, it would have to be this sell side, right? Or at least, if you saw in the chat, or at least price is going to come back down to 2 a.m. That's what I want price to get down. I said that in the Telegram channel. I want to see price at least get down to 2 a.m. and even possibly even further fill that new weekly opening gap that we have. Now, many people may ask, well, now what do I do here? Price breaks the buy side. Well, now you're going to look for a lower time frame entry. So I frame it on the 15. I like to go down to the 1 minute. That's what I do personally. People might go from 15 to 5, 15 to 3, 15 to 2. I'm going from 15 to the 1 minute. Now, the entry idea that I'm looking for is going to be a fair value gap that runs through a swing low since I'm going short. So it needs to be some type of inefficiency to the downside running through structure. So let's play it forward. So we got that break. And do we get anything that looks like a fair value gap through a swing low? No, we do not. Not yet. Nothing like that is shown here. And when I mean a swing low, it's got to be one of these 1 minute swing lows a fair value gap is running through. We don't have that. Let's keep playing it forward. Price comes back up again, right? So you got to be patient. Some traders might see this and be like, oh, let me jump in and go short. You could, right? You're being a little more aggressive. Unless all your signals check, right? Then you take your shot. If you don't see your signal, you don't see your entry, why take the shot? Right? That's FOMO, right? This fear of missing out on the play. But if you simply wait, sometimes waiting, you'll still get your entry instead of jumping immediately because you see the market start to potentially sell off. You immediately jump in and go short, and then it burns you a little bit, right? Or you're in some drawdown that you didn't want. Simply wait for your model. Believe in your model. Sometimes it might happen immediately. It might happen around 2:10. It might happen around 2:30. It might happen around the end of the session. It might even happen at 4:59 a.m. I've seen that countless of times where I have to stay up and be disciplined, right? And watch the entire kill zone. And sometimes the entry would happen literally at the last minute, right? Price would trade right into my entry, or the entry would form right around the last couple of minutes of the session. And I'm able to get that short, or I'm able to get that long, whatever that play may be. Let's play it forward. You can see right here, instantly. Look at that. Got to swing low. 1, 2, 3. Look at that closely. It looks like an equal low. It's not. This low is lower than that one, and this low is lower than that one. So this is that swing low. Let's bring it back to it so we can see it again. That's that swing low. That's what I'm looking for. I'm looking for that swing low right there. And price runs that with that speed, that fair value gap. So it runs down, then it opens, it doesn't rebalance. The next candle opens, runs up a little bit, rebalances slightly, and then sells off. So now it leaves this inefficiency. This is the entry. This is my favorite entry for the lower time frame. You'll see this entry on all time frames as well, especially the daily, the weekly, the monthly, etc. You'll see this, right? In order to train your eyes for these things, go on a higher time frame so you can see it larger, right? Seeing the actual structure larger in candles, it's a good study so that you know, okay, if it happens on the daily, it can happen on the 4 hour. If it happens on the 4 hour, it can happen on the 30 minute. If it happens on the 30 minute, it could definitely happen on the 1 minute. And that's what's happening here. This is where I'm looking to go short. We also can note off that price is where forming the physical entry, right? Objectively, this entry technique or this signal that we're going to take the short in is physically forming above 12 a.m., 2 a.m., and Sunday's opening price. Triple confluence sell idea, right? Almost a one shot, one kill idea. Now it is Monday, so I wouldn't guarantee Monday would be the one shot, one kill. Sometimes it can happen on Monday, but this is a great idea where we could possibly get a sell idea that could run on for more than what we're expecting. So I typically look for a one-to-one scenario, and my one-to-one scenario is going to be 15 pips. I already have the template here, one-to-one, 15 pips. So you can see that. Right, I'll measure it so you guys can see. So from here down, looking for 15. That's all I'm looking for. 50. Excuse me. I'm looking for 15 down or either 15 stop loss to protect me. That's it. Risking 1%, 2%, whatever that case may be. We also talked about if you're going to trick a trade idea and you get 10 pips into profit, right? 10 pips right around here. Scale something out. Take 80% off the trade. There are times where I get into a trade idea, I get around 10 pips, 11 pips, 12 pips, and then the market completely reverses on me, right? We can't control the market. Everything may line up. Your analysis, your technical, your fundamentals, you did your macros, etc. You waited for all the confluences, the signals, everything may be lining up, but it doesn't guarantee, right? Whatever TP you were looking for or whatever draw on liquidity that you're looking for, we can't force the market to get there. It will do it itself. So with that being said, always use a stop loss, always take partials when necessary. Play it forward. Right? Boom, right there. Price taps into it. Now, some people, right, are freaking natures when it comes to trading, right? They want to know where inside the fair value gap is price going to fill. I have no idea, right? I don't think a lot of any trader really has the answer to this. I don't think nobody should because it's pretty vague, right? It's a gray area. We don't know if it's going to fill the entire fair value gap. We don't know if it's only going to fill 50% of that fair value gap. We don't know if it's only going to fill the bottom quarter of the fair value gap. We have no idea. So we're taking the first entry giving to us, right? The very first one. So that's why we have that institutional order flow drill. Soon as it touches it, we're going short. We don't care if it gets to the premium side, the top side of the fair value gap and going short. If you could get that second position, right, and stack, then kudos to you. But that's not what we're looking for. We're looking for one trade, singular trade, one trade, 1%, right? Simple numbers. We got 10K, right? You got 10 grand. You're taking a 1% trade based on 15 pips, one-to-one scenario, right? 1% of 10 grand, that's $100. So if you win, you're up $100. If you lose, you're down $100, right? That's not the end of the world, right? Because that's very simple risk management. Now, when you start saying, oh, I'm going to risk 5%, you're risking $500 per this trade. Now, if you win, you're up $500, which is great. You know, you won. Congrats. But if you lose, right, you're down $500. That's not a good thing at all. So manage how much you're risking. 1% and compound slowly. You're intraday trader. Take that one trade every other day, right? You like to trade Tuesday, Wednesday, Thursday. Okay, make those all 1%. You're gonna risk 3% max for the week, right? So if you lose 3% in the entire week, you get there. Don't trade for the rest of the week. You're done trading. You shouldn't be looking to trade again. Come back the next week, right? Because your mind too, psychologically, your mind might be off, right? We're not always mentally tough. Sometimes we go through adversities outside of trading as well, right? Life is tough. You're always going to face something. So even though you may think you got this trading thing on lock outside of trading, you know, life may throw a curveball at you and it might throw you off your game when it comes to trading. So step to the sidelines, come back next week, mitigate those losses. You can't risk the same 1% if you lost the trade. You can't risk the same 2% if you lost the trade. You got to risk half of that, right? Or a quarter of that. And whatever amount of trades that it takes to make that back up, then you could go back to risking your 1%. You broke even, you got out of the rabbit hole. Now you can start to move on and try and compound the account. So that's the entry short, and then we press play. And TP hit. We got right back down into midnight opening price right there. Right, let's bring it back over so we can see it a little bit. Midnight opening price, Sunday's opening price. Bring it here. Tap right into that. And then we also have that sell side here. All we did was frame this range. That's all we did. We used this range objectively and framed it. There's no more second guessing. Oh, what is consolidation? Or what's a consolidation high or consolidation low? We have it. That was the consolidation high, and that was the consolidation low. I remember as a new trader when I was trying to figure out, oh, what consolidation is, and I'm over here trying to mark up this random box, you know? Oh, that's my consolidation high. No, now I know I'm gonna use objective measures. I'm tired of being subjective. Right? I'm not gonna get great results if I'm subjective all the time. I need to be objective and I need to be able to measure and track the data and see the same phenomenon repeat over and over and over again. I can't be changing the way I use my entry. I can't change the way I frame my kill zones. I can't change the way I frame my consolidations. I can't. I need to be objective every time. Rinse, repeat. Play it forward and bang, hits the final TP on the other side. So that was the target, right? While price was up there and it broke it, this was the target. And now it finally got there and trade was successful. It was a nice trade. We mentioned in the Telegram channel that we had that new weekly opening gap, and I said I want to see it push down here too. Right, we were able to get that push down there. If you saw, that thing continued to sell off pretty good, right into Sunday's opening price. Look at that reaction. Look at that sensitive price point. Right, out of all the price action, out of all the price points, hits that level there, respects it really nice, gives a small reaction. Now, I'm not saying this was a buying opportunity or warranted a buying opportunity. It's just nice to observe, right? Being a student of the market, it's nice to observe those things. And it melts right through that gap during the next dead zone, which is 5 to 7 a.m. And it just melts through that dead zone. Gets below it a little bit. My TP was literally just below. I already scaled out. And when I woke up, I was looking at the trade back at break even pretty much, and it got stopped. Yeah, my TP was somewhere down here, and I was like, "Dang, you got me." But I was like I said, you always got to pay the trader. Take something off the trade. What I take off the trade is anywhere 80%. Take 80% off the trade, move stop loss back to break even, and the market push all the way back up. And this is where we are currently in time. So hopefully you found that insightful. That's the London model. Now, this isn't warranted every day. I'm not saying every day you're going to go into the market and it's going to come out picture perfect like this. It's not. We know that. Same thing for the New York session. Same thing for the Asian session. It's not going to be perfect. If it was going to be perfect, we all would have 100% win rates. We all would have no drawdown. We all would be funded. We would all be millionaires, trillionaires by now, right? If it was 100%, all the traders in the world would be successful. But it's not true. Because even with the plan, even though as a good trader, right, there's other things outside of that will hold back good traders, right? Cutting your losses too late, right? They're just very optimistic about the trade or re-entering a trade and forcing a narrative, right? Buyer's remorse or seller's remorse. The market is going down, and for this example, right? Traders might have been counter me. Of course, there's going to be counterparty, right? Because for every buyer, there's a seller. So someone in the world, right? There's a trader somewhere in the world that was buying the orders and a premium, right? They saw price break out. They probably was trying to buy it, but then they had buyer's remorse, right? Because price kept breaking down, and every time they got a short-term rally, they probably went to go long again. And then what did they do? They put a stop loss below a low, and then it comes back out and stops them out. And then they get frustrated, and then they see a short-term rally again. What do? They buy again. They put a stop loss again. Then it runs them out, right? That's buyer's remorse. Same thing, vice versa. Seller's remorse. They see the market is rallying, right? And every time it gets a short-term dip down, they look to sell, and they put a stop loss above a high. And instead, price runs that high out again. And then they do the same thing again. They're going to try and sell every time they see a peak. They sell, they put a stop loss above it, the market rallies. And that's how they eat away at their accounts slowly, right? You start to go into bad habits again. You completely fall off the game plan. The game plan was 1% risk, 10K of 10K. That's it. right? 1-to-1 scenario, whether you're looking for a 2-to-1, a 3-to-1, 4-to-1, you do as you please, right? Everyone has their own risk protocol. This is my risk protocol. I'm just showing you what I do to be successful in the market. Now, not all the time does the trade pan out as a winner. We know I'm not free from that. I do take losers. I openly show you guys that, yo, I lost this trade, or this swing trade didn't go well. I lost 3%. You know, it is what it is. And that's the life of a trader. This is the game you signed up to play. So play it well, especially if you're using your funds. Time is money. You have a finite amount of time on this planet. Make the most of it. Get with a program, get with a strategy, get with a little team, get with a community that really cares about you and really out there spreading real knowledge. Do not waste your time with nonsense. If there's any questions, please let me know. I got a few minutes before I go. Mm-mm. Hopefully, you guys are able to see my screen. Knowing me, I end up not sharing my screen. If there's any questions, let me know. I will post this on YouTube as soon as we're done. There's the chat. Yeah, I think nobody's got any questions. I think we're solid. My pleasure. No problem, my G. No problem. All right. What are you seeing with the good question? All right, that's a nice question. Let's go to the chart. Um, right now, especially with everything that's going on with the US economy and the new regime, with President Donald Trump, there's a lot of things being said, a lot of implications, especially with the tariffs and the taxing of imports and exports from other countries. So unless these things actually play out and pan out, and he actually sticks to his word and put in tariffs on these countries, um, this could either hurt or help the U.S. economy, or hurt or boost the U.S. dollar. Normally under Trump's presidency, the dollar tends to be weak, or under any Republican regime, it tends to be a lower dollar, not higher dollar. We also have the Fed's rate coming up. We also have Bank of Canada's rates coming up, and I do think that if the Feds don't cut, that is strength to dollar, which means they think inflation is still here, which I do think inflation isn't gone. Prices are still going up higher, and people are paying more per dollar. I do think if they do cut, we are going to see dollar drop. So if they cut, dollars dropping, and we're going to see UCAD. We're going to see UCAD, U Swissy sell off. We're going to see GU, AU, NU, AU rally. So let's just take a look at, let's say GU real quick. Daily chart, reset, get rid of this. And so far for the year, go begin 22nd here. We dropped it low, the yearly opening price, and looks like we're looking to push higher. I do see right now currently GU, in my opinion, has bullish momentum via daily chart. So just simple things that I'm going to put on the chart. I'm not going to mark up too much. We broke a swing high up here. We recently broke this swing high. And then after breaking that swing high, we printed a higher swing low. That's a bullish formula right there for you. And we have all these lower swing lows, and prices just slowly pushing higher. After these down days, prices moving up higher. Let's take a look at another major. Let's look at AU. AU looks very similar as well. What was on the chart? Oh, that no. There we go. AU looks very similar as well. So we're getting higher lows in the year of 2025, right? Higher swing lows. And did we get structurally break to the upside? Not recently. So no real swing high broken, and then a higher swing low forms. Technically, it did in this one breath. Breaks the swing high here, and then there goes your higher swing low. So we have signs that price action probably is going to continue to go higher for AU. EU, similar as well. Price broke a this is the most recent swing high before this swing low here. So we have signs that the price is going to keep going up. Again, we're in a funny situation with the dollar. At least I think all the other banks are in agreement right now. They've been cutting rates, as we see at the end of 2024, going into 2025. They've been cutting rates. The Bank of Canada, let's go UCAD, is expected to cut. Let me see. There it is. They're going to cut 25 basis points. But then if you look at the Feds, there's no the forecast says that it's going to remain unchanged. Now, I don't know how likely that is going to be, but if we already know that the Bank of Canada is forecasted to cut their rates, that means dollar is going to get a little stronger against UCAD. So look out for UCAD looking to break out to the upside, possibly, or maybe we get a false rundown and price continues to run up for the rest of the month or going into February since the month is almost done. Seasonally, though, I think dollar. The dollar. I'll show you guys my chart. Share the screen. Click Forex. Let's go dollar index search. Just a very generic one. So February is supposed to see some bullishness come into the dollar, and if I compare that, right, February is bullish. Just remember that. If I compare that to something else like, let's go Australian dollar. I want to see opposite. Looking for the futures. I want to see February be going down, not up. It's a little choppy. I don't like that. Sideways. I wouldn't touch AU in February. Let's go British pound. Ooh, like this. Okay, so we got British pound being bearish, and we got dollar being bullish for February. So GU might be a very great pair to trade in February. And it doesn't mean it's gonna sell off. Doesn't mean GU is gonna sell off. Dollar's gonna rally. I'm only saying that because by correlation, they are lining up. So it might be primed to move, whether it's up or down. I don't want to see when the market is going in the same direction for the seasonal tendencies when the asset should be moving in opposite directions. So if we had dollar going up and British pound going up, I wouldn't touch GU. I would look for something else where all the macros, the fundamentals, and technicals are having less resistance. I wouldn't force a narrative on something that the macros is telling me, okay, there might be an issue here. So that's my stance right now with the majors. Um, I'm not going to really try and predict whether or not things are going to be very bullish or very bearish by next month. But right now, the majors, EU, GU, AU, NU, um, yeah, bullish right now. Bullish stance, bullish momentum right now. I don't see signs of bearishness. Gold is still probably going to keep pushing up higher. All-time highs is around the way. I was looking for a gold short, and I was like, there's a smash candle sell. I was going to go short last night, but I was like, nah, D, leave it alone. Let's look for something else. And we had a nice sell-off here for gold. You can see that there. That's that smash candle closes above. Price gets that back down to that low, and it's making a what possible top, right, to sell off. Maybe we do get that sell off into February. That would be sweet, honestly, to see. We saw that last year. Last year, February, gold melted. So if we get to see that same phenomenon repeat here in 2025, that would be awesome. I would like to see gold sell off next month. We traded up into that fair value gap, that very last one before the all-time highs. We got up to 2,780K an ounce, and we sold off, right? These are all the institutional algorithmic levels. And just look at how they teeter-tot around these levels. Very sensitive, especially for gold. This is how I like to trade gold or mark it up on my chart. But we could be seeing a sell-off on gold and dollar rally in the next couple of weeks. So look out for that. Um, yeah, and the momentum has been bullish for a while, right? Swing high broken, wait for a higher swing low. Ever since then, prices has been trading up, 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 up. I do got to clean this chart up, but yeah, that's my stance right now for the majors. Gold is bullish long term. Like the destiny for gold is always going to be bullish because there's always going to be fear. There's always going to be war in this world. No matter what generation you're from, you probably figured out that there's always going to be war. There's going to be conflict. Um, people just can't get along. Everyone has two different opposing ideas. Not trying to get too political, or religious or whatever the case may be, but that's just the way we are as human beings. We tend to say one side is right, the other side's wrong. I'm right, you're wrong. So gold is definitely long term play. Buy gold. Like we said that last year in 2020, at the beginning of 2024, we said that gold was going to keep outperforming, and sure or not, it did. So just crazy to see what gold is doing. Like what? Gold is not supposed to be bearish. Like this thing is going to hit 3K probably this year. I think gold hits 3K. If it's not this year, then it's next year. We do need some type of retracement though. One of these years, we're gonna get some type of strong retracement, some down years for gold. All right, let's go back to the chat. Oil. Okay, you want to ask about oil? Okay, let me pull out my other chart, my IPTA chart. This will be the last question. What time is it? Gotta go flip the laundry. Dang, the end. UJ tanked today. So ever since we had that IPTA 20-day, 60-day high break, the last daily update, it's been a while since I did a daily update. I said that we are either going to continue that trend or there's going to be a retracement, right? And we got that retracement. We filled that entire fair value gap. Now, the fact that we filled the entire fair value gap, I would look at this as an IVG, right? Price is going to trade into this, respect this zone possibly, and then sell off, right? It's going to trade into this area probably a couple of times more. So I locked it a couple of times more. Probably trade up into this and then sell off. Right now, yeah, I would say U.S. oil is bearish right now. The momentum has shifted back bearish. Why do I say that? Well, we had the smash candle idea, large candle to the upside, get traders to chase the longs, right? Psychologically, right? When they see this candle, physically it looks large. So traders are doing what? Oh, I'm going to buy the breakout. They buy it the next day. They might get lucky and probably get like maybe a day or two of bullishness. But we could see immediately after getting that candle to close so high to its high, turns around really fast. Right? These are small signs. If you read Larry Williams' book, exhaustion, right? It's closing higher than most candles, and it exhausted itself and sold off really quickly. We also had an up close candle, and then the next day we show signs of respect of selling. So instead of getting two up days, right, we ended up getting up one up day and now very strong selling. We had no respect to this bullish order block or this one here, these last down close candles. We had all these fair value gaps that I wanted price to trade into before taking this damn cannon to the upside. Excuse my language. Um, I wanted price to trade back down into this and then trade higher, but we weren't able to get that. So maybe price is drawing for this here, right down here. Also, again, with the new regime with the US President Donald Trump, they're looking to possibly open up more sites to drill, So a lot of people are betting on oil, saying that oil is going to be the next super trade. There's also like a US oil stock or petroleum stock that I was looking at. It's called Oxy, OXY. Literally is doing the same thing as US oil. It ran up and then it sold off. So I'm kind of gonna step back on oil because those they could be false promises, and people they can say, oh, we're gonna open up more drilling, we're gonna drill more in the USA, and then time goes around, they never drill and they never get back to reserves and stuff like that. So US oil right now bearish in my stance right now because we also broke a swing low. So what happens when we break a swing low? That is signs of possible bearish momentum or false break. Remember, it's either one or the other. It's not like a third variable. If anything, if there's a third variable, it's consolidation. Market's just going to range bound. But I like to keep it very simple, black and white. We break a swing low. What does that mean to us? Okay, we break a swing low. This either means false break or this means, oh, continuation lower. And I'm trying to get that continuation in some type of pullback, a lower swing high on the daily chart, or maybe a 4-hour smash candle, right? Price closes up and does the same thing on the 4-hour right here, and then the next candle it sells down. So yeah, oil is bearish right now. It's pushing, man. Yeah, it's probably gonna just trying to get back down here. These are clean lows right here, clean lows. This is areas where they accumulated the orders and then shot it up, and now they're trying to get below that accumulation low, accumulation range, and then sell off. It's the same thing that we talk about playing ranges. This is a range. This is a daily range. The market is moving sideways. Now I know it might be a little subjective, but it was trading sideways. These candles are hugging, right? They're shoulder to shoulder. All these candles here, 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 here. All these candles are shoulder to shoulder. So we could say this is an area of consolidation or accumulation. It looks just like how we talked about UCAD, right? There is an area of consolidation. Price breaks one side of the consolidation. It's probably looking to get to the other side of the consolidation. So, great question. All right, guys. I will talk to you guys later tonight. Maybe we get a nice little Asian session set up tonight. If not, see you guys Tuesday, London and New York model. Peace.